ReadySetFutures.com. It is the 9th of October, Sunday. And this is your weekly wrap-up for the week beginning 03 October. Guys, as we do in our weekly wrap-up, this is really intended as a longer-term view of the markets. We take a peek at the commitment to trader action on the week, as well as we talk about our performance, both as an individual trader as well as kind of a, channel manager, if you will. So let's get right into it. Before we do, I want to give a big thumbs up and a big shout out to our new subscribers, any new viewers. You guys are starting to really drive the channel, and I appreciate it. But let's get right into the action. So we're going to cover, again, performance. We're going to look at our daily and weekly charts of the instruments that we peek at every day on the daily market wrap-ups, and then we'll get into our commitment to trader action. So on the week, channel performance was good. We put up a daily market wrap-up every day in the afternoon, in the evening, before kind of calling it quits on the day. So as far as channel performance goes, that's about as good as it gets. And here we are doing our weekly wrap-up on the week. So that's terrific as well. Trading performance, not so great, right? If you guys were listening earlier in the week, I was attempting to get in short. I actually tried 2 days in a row and missed entries on both days. I was just essentially trying to top tick the market, and we know that typically doesn't work. So again, missed trade opportunities on Monday and Tuesday, and got short finally on Wednesday, and I'm still short. Holding through the weekend. And it will be an interesting open tonight. There's definitely some news out from Deutsche Bank, so that should weigh on the market open. But anyway, so overall, like I said, lackluster performance on the week as far as trading goes. However, we trade our plan, we plan our trade, and vice versa. So, as I said, I was able to get in short on Wednesday and have held since. Moving over to charts, we're going to take a look again at copper, gold, crude, and the ES. We're not going down any deeper than the daily level. In fact, we're going to probably keep it at the weekly level. What we're looking at here is a daily chart of copper. And just so you guys get some perspective on the date, this is all the way back from the 1st of January of 2014. You may be like, well, why 2014, right? Well, 2014 is when we saw the big commodity complex, if you will, change materially. And so I think it's, for me anyway, it's good to keep that into perspective. Again, if you watch us, we look for kind of inflection points in the market, and then we see what volume does there, or does after it, I should say. And so that's why we have kind of this longer term picture here with a volume profile chart up since the beginning of January 2014. You can see our ride down. I wouldn't call this thin volume, but relatively so. Yeah, thin volume. And then since we traded down here in the end of 2015, really the beginning of 2016, we've chopped around here, and we've certainly built enough volume to overtake from a volume point of control perspective. But let's kind of dig into our range bound action. You see here, since late 2015, actually even late November, we've been certainly range bound in copper. Most recently here, off of that kind of lower end of the range, we made a move higher, and we'll see where we go from here. We'll pull up the commitment to trader report. It shows short on the commitment to trader report, or at least bearish. It's a bias that you may take in the market. This week we sold off in copper. There's no doubt. We sold right back down to the volume points of control, and we may head lower in this market. It's just a timing issue. As far as I'm concerned, you may have a very different perspective on copper, but I look at this short. I look at this as kind of completing a move that took stops above 221, and this little consolidation area here back from the beginning of August, and now we're heading lower. I think that we'll probably chop around here around 215, 216 for some time, but when we pull up the COT report, you'll see commercials are moving to the short side. Heading over to gold. Gold's a pretty great story, at least because we've been talking about a move lower in gold before it takes off higher on its next run. I will move over to the weekly chart here in gold. Just again, here's that big longer term volume profile. Not really a whole lot to say about it in gold, but these are the December lows. We came up, we consolidated, we came up, and we consolidated again. If you look at these consolidation patterns and their duration, they're not materially different, at least from a duration standpoint. What we see different in this is this move lower. But from that last move up, we got a 38, essentially our first Fibonacci retracement, and then now we've sold off down here to the 70% retracement. This, for myself, looking at the COT stuff, wasn't really unexpected. If you go back to, listening even at the beginning of the channel, you can hear us talking about a move lower in gold. Formed up this nice pennant. It was pretty textbook stuff, and then swept stops down here around 1300 on the way down. So if you guys also listen to us on Friday, but around 8:30 in the morning Friday, there was just a tremendous amount of selling action in the gold market. And, my thesis is that these were just stops ran at 1250. Nothing more than that. Again, my opinion only. And so, if that's the case, we could see a move higher in gold. And when we look at the COT report, you can see these guys kind of starting to get off of the zero boundary. It'll be interesting to see what happens in the coming week in gold, and it'll be quite impactful, I think, to the rest of the overall market. But this is a market that's moving. It's a market that's forming new patterns. It's really an interesting market, if you ask me. But that's what we got on gold for you. I am trying to, kind of keep these. We usually run about a half hour in these weekly wrap-ups, so I'm trying to bring it in for you guys. I know as much as you love hearing my voice, you probably got better things to do with your time. Anyway, so this is crude, and we can blow out here. Right? This kind of looks like copper. If you look at it from a volume profile perspective, this is just the destruction in the crude price, and you can see really thinly traded between about $105 and $75, and then we begin to build volume as we chop around. Interestingly, as we've kind of traded around this between 34 and 55 for all of 2016, you can see there's quite a bit of volume that's built as a result. A couple volume profile that we have here on the chart. This most recent one was from the Algiers meeting and the agreement to agree. Just on Friday, you see here we sold off quite a bit off of the $50 mark, and I think we're going to continue trading lower in crude. I know that's kind of against what our Saudi oil ministers probably, well, they may actually want it, but again, this is just an agreement to agree. We don't have any specifics on the deal. I think myself, it's a fairly thinly veiled attempt at lifting the crude oil market price, but I don't think it's going to land. And I'm going to show you on the COT report why I think that. But interesting. In crude as well, to certainly bid off of the Algiers agreement, but that action in gold really. It also drove many of the other markets down. Well, I think we're going to continue to see that in crude, although, I wouldn't stand in the way of it. I would pick your spots. This is the ES. Finally, we're here at the ES. Again, daily chart on the ES. Two volume profiles up on the screen for you guys. The first here on the left side is from Brexit. That's the move in the action since the Brexit vote back in June, and then the more recent one is from Chair Yellen's hawkish hold, as we say here. But it's interesting as we kind of zoom in and look at these daily charts. Look how well or how strongly this market is bid off of the 2135, 2140 region. Just really strongly bid, but it's also countered by a significant amount of selling action, and I think more aggressive selling action. Here we swung back at the end of September, 2172, then lower 2168, and now lower at 2161, and we closed the day down on Friday, and we actually finally closed below and outside of this kind of triangle pattern that we put up on the chart about a week and a half ago. So in my opinion, that is significant. You guys know I'm a bear in this market, and I have a short bias, but it's tough to argue with this. The only kind of saving grace I see on this from the bulls perspective is that we continue to get bid out of the 2140 area. I'm going to break it out on the weekly chart so you guys can see. It's our first downward close in about a month. We had 3 higher closes during the month of September, and our first week of October here we lost traction. So also closing below the volume point of control from the daily chart here from the Fed's move, as well as Brexit at 2153. So continuing to get interesting in the ES. I continue to be short. I continue to like this market short. You got to pick your stops though, or pick your spots, I should say. So that's the charting stuff that we've got for you guys. I'm going to move right into commitment to trader report, and we're going to start back here with Crude. And I'll orient you guys to what you're seeing on the chart here. This is our COT oscillator from Larry Williams' book, Trade Stocks and Commodities with the Insiders. I did a book report on that. I encourage you guys to read that if you want more information about the commitment to trader report and how, at least how Larry Williams uses it, and how to get in and understand where this oscillation or oscillator comes from. What we're seeing on the chart, we got 3 lines for you, 3 oscillators, I should say. One represents commercial interests. One, the orange line is our speculators, and the gray line is the public, non-reportables. The blue line is the commercial guys. We have a 3-year oscillator, and then we also have a 6-month oscillator, just to kind of get a bit of a different perspective. The top one is the 3-year, and if you see just this last couple weeks, oil from the speculation team, these are large hedge funds, these are commodity trade advisors, these are managed commodity funds, bid crude oil, no doubt. And we see that in the price chart. It's certainly a heavily bid market, but the commercials continue to sell into them. And we've seen that. If you look back here in 2015, this was the run up in crude back up to like $60. The commercials this was here in April to July, bid up by our speculators, and the commercial interest just sold right into them. And so that move wasn't going to last, right? There was nothing behind these guys. Once they ran out of steam, and they got a lot of steam, don't get me wrong, these are big players, much bigger than you and I. But when they run out of steam, they run out of steam fast. And if the commercial guys aren't behind them to pick up the action and carry it forward, then the market just comes back down. Same thing happened here when oil was trading up to $50 earlier in the year. The commercial interest didn't follow, and we sold back down. Same kind of pattern is happening here. We're getting bid by the speculators, by our managed money interests. The interesting part here is that the commercials still are a little longer. You can see their longer term action is inflecting higher. However, they continue to sell into them. Moving down here to the 6-month chart, it's a little bit more telling. We could see our speculators here for the past 2 weeks anyway, we're getting bid, but sold right into by the commercials. So this is kind of informing my bias on crude, which is bearish. Copper, 3-year chart on copper, same lines. We got our blue commercials, we got our orange speculators, and we've got our gray public. So yeah, this one shows me the commercial interest are getting short. They're getting shorter. If you look down at our 6-month chart, you can really see that. And so I like copper short. Gold, great little story on gold. This last week, big uptick in gold, and we can actually see the public getting a little bit higher, and we can see our our speculating interests getting a bit shorter. Looking over here at down here at the 6-month chart, you can see there is an upward lean to our commercial team and what they're doing in gold over the past 6 months. So they are accumulating for this move, for this run higher. And actually just this last week, especially with the drawdown in price, they certainly took advantage of that and bought. As you can see, our speculators did not. They were probably one of the primary driving forces behind the sell-off. So that is aligned with our kind of longer-term stance on gold. Moving over to silver, this is kind of the big story. I mean, this is a big move in silver on the 3-year chart off of this lower zero boundary. And then the 6-month chart, certainly they changed their position by over 40%. So that is a big move in silver. And if you guys listened from last week and the week before, we say silver moves faster than gold does. This is true in the marketplace. This is true in the commitment of trader aspect as well. And you can see these guys are now starting to bid silver, which portends well for gold if you're a bull. So it's also aligned with what we're saying. We expect this trend to continue. Now, moving over to the ES, our commercial guys, not commercial. We have dealers, we have levered money, asset managers, those kind of things is in our speculating kind of orange conglomeration here, and then still the same gray line for the public. Dealers getting longer, only slightly so, but you can see our levered money guys just selling off in the past 2 weeks, telling for me, and also, kind of aiding my bearish opinion of this market. Heading over to VIX, we're going to finish out with the VIX and the dollar, and I'm glad we're under 20 minutes still here. So VIX getting long and longer. This is pretty amazing how long these guys are on VIX, and this is the biggest of the big money. The dealers, they are continuing to bet that we are going to see a major, increase in VIX before they sell into it. The 6-month chart, you can see these guys are starting to kind of, shift a little lower, which is aligned with what we see in the market. If you guys look at VIX at all, VIX has kind of steadily been increasing higher, and these guys have been steadily selling into it. Although moving back out to the 3-year deal, you can see that we're still at kind of historic highs here. The dollar is continuing just this kind of cluster of, who knows what. I mean, this kind of can't make heads or tails of this one. There's not a whole lot of extreme positioning in the dollar, which screams uncertainty, right? And uncertainty, at least in my opinion, breeds volatility, which is also kind of aligned with what we saw in VIX. So, the dollar commitment of trader information here, I can't, nobody's really getting long, getting short, but they are staying about even, which just indicates that we have uncertainty in the market, and that should drive VIX higher and the ES lower. So also kind of adding to the bearish case. But you guys may think it completely different. You guys may feel very differently looking at this stuff, and that's totally cool. That's up to you guys. This is just my perspective that I'm sharing with you. As I said, I'm doing this stuff anyway. This is part of what I do each week to get ready for the week ahead. And that's what I got for you guys here on our weekly review for the week beginning 03 October. I hope you guys had a terrific weekend. I hope it was a special one for you. I hope you really enjoyed it. And I wish you guys the best in the week coming up. If you like it, hit subscribe. Feel free to share this stuff with your friends if you find value in it or you think they might find value in it. Go ahead and subscribe by all means. And that's it, traders. So we'll see you guys coming out. To everybody out there in North Carolina, Florida, South Carolina, who got through Matthew this past week, big high five. Hopefully you guys are all right. Thoughts and prayers go out to you.